Okay, guys. Hi, you guys. How are you all?
Hi, Jessica.
Hi,
Hi, Jessica.
guys.
Hi, Jessica.
Hey,
Happy
Jess.
Hey, Jess.
Hi,
Good
Jess.
evening.
evening. Good evening. Hold on, let me just put this in a group real quick. Um, Give me 1 second. How many people made money this week?
Yeah, a little bit.
Me.
Yes, a little. I made money.
I love that. Okay, good.
It was a great week.
I love that for you guys. All right, so as I promised on Monday. Mr. Tony came and, blessed us with his presence and blessed us with his fundamental knowledge. And I promised you guys that he was going to come back on this Sunday. One for the YouTube people, just because I know that we did like a very private community thing since elections were coming up and stuff like that on Monday. But I definitely feel like there's still so much information and knowledge that he dived into, but didn't finish getting into. So, um, is this milk? Oh, I'm sorry, guys. I was just being mommy. That's so awkward. Okay. I should have changed my shirt before I hopped up on here. But yes. So Mr. Tony, you here? Oh, I think your microphone's on mute.
Oh, there it is. How you doing?
I'm good. I'm good. So the
Yes.
floor is yours. You guys, I do want you guys to save the questions to the end just so he can like get through his information and stuff like that. Or Mr. Tony, you could do it however you want, but just in case.
Yeah, we didn't get a chance to get through it all last time. So we'll go through a recap real fast of some of the things and then present some of the new materials. And then at the end, I'll try to make that part brief and then we'll go through question and answers if anybody has anything they want to say, any question they want to answer.
Okay.
I do my best to do so.
Okay,
All right.
perfect.
All right. Well, thanks for the invite back, Jess. I appreciate it as always. You're always wonderful. You're always fantastic to me, so I appreciate that. Uh, so my name is Tony, and I've been trading for a while now. I really got back into it in 2018. I started in my early 20s, got out of it for a while, didn't get right back into it until about 2018. I trade uh I trade futures, options, and I build portfolio building a portfolio. Uh so what we're going to go through now really is just some fundamental information. We're not going to get into any technical information. That's I believe that's a jest to go over. Um, but if you got any questions about anything, I try my best to answer those questions as it relates to fundamental analysis in the market, how things relate to each other, and how you can use that information to make trading decisions long before you look at a chart. And then once you get into the technical side of it, that's when you make your entry exit decisions. But we're going to try to get to the point where you have at least some basic knowledge about how the fundamentals affect and can benefit your trading. Okay. So hold your questions if you got any. I'm gonna make this part brief. We kind of went over last time some of the effects of the election that will have on the stock market, right? And just real briefly, we went over the fact that there would be market volatility leading up to the election due to the uncertainty of what the election was going to bring. We went over some historical trends, and historically, stock market tends to experience the lower returns in the year leading up to the stock market, and then after the election's over, they tend to have a nice little bull run from uh, November November 1st until about May 1st. That's also called the October rally or the October effect. Um, and then we talked about a little bit about the policy expectations from the different candidates. And we started, I think we kind of mentioned a little bit about presidential projects and how whatever the president is into, those are areas that you need to watch for movement in terms of either building your portfolio or making investment or trading decisions, because those are the areas that tend to get funded or increase interest as the president takes his office and starts putting his policy out. Investor sentiment, the overall sentiment of the market can shift based on the perceived stability or the instability of the new administration, right? Whether, whatever their policies are in one area, like Trump is going to be really good for perceived to be really good for business, but he's probably going to be really bad for, immigration, even though in order to do his immigration policy, that's going to have to be funded. I don't know how they're going to do that, but he's going to be really good for business. So as you probably all saw just last week, when just as the idea of him winning the election, Bitcoin took off, the stock market took off in the futures market, and the next day when the market opened after the election, we had a nice little run because all of the uncertainty surrounding who was going to be president was kind of abated. So the market doesn't like uncertainty. So whenever that happens, you're going to tend to get either choppy markets, or you're going to get people or big institutions who are really following. You're going to get them to try to most of the time sell off their positions because they don't like uncertainty in the market. They like to be sure that their investment is going to go the direction that they are intending it to go. So some of the main projects, we don't have to talk about Kamala's projects anymore because she's probably not going to be president at this point. It's safe to say. So some of Trump's main policy areas that we probably need to focus on going forward are going to be immigration, right? The deportation of people, how that's all going to play out, the staffing, the transportation, the housing of the people, the movement of the people, how that's all going to happen, who's going to pay for it, when, where, and how. His economic and his trade policies are going to be really in play. His tariffs, if he's going to try to impose this 60% tariff, which is really ridiculous. So it's probably just a talking point of negotiation, because if he puts a 60% tariff on, say, on Chinese products, then that's really going to hurt the consumer because we're going to be the ones ultimately paying for that tariff. The businesses are going to take the money, but they're going to charge us to take that burden. He's going to look at some innovative projects. I don't know what he has going on with Elon Musk, because he has historically been against electric vehicles, but now that Elon Musk is his main dude, they may all change. Who knows how this is all going to play out with their relationship now. Elon Musk was kind of one of the main characters that's probably helped push them over the top. Trump is not that big on Obamacare. So there may be questions surrounding the survival of Obamacare, especially since it looks like they're going to take both the House and the Senate to run their full agenda. I don't know how that all played out. I know they had the Senate, but I wasn't sure about the House yet. But if that indeed plays out, that's going to be a topic of discussion. He's also probably going to be really good for law and order, police staffing, that whole policy surrounding funding the police, training the military, things like that. He's probably going to be real good for that. The war in Ukraine is going to be in question. He's probably going to try to end that war, which the United States probably had no business being in the first place. And if you really look into that, then you'll start to see why the United States was really involved in Ukraine in the first place. And it had nothing about protecting the people, just like it didn't have anything to do with protecting the people in Iraq or Afghanistan. The United States usually has a monetary interest in the wars that they participate in, and they either say it's national security or they're going to the guise of we're protecting democracy or something like that, but it usually has something to do with money or some precious product or raw material that they need to get their hands on. So, but that's just my 2 cents based on looking at how the fundamentals and how the news explains what's really going on. Not the mainstream news a lot of times, but you have to go to third-party news like the BBC or YAN or something like that to find out what's really going on in those other nations and why the United States is really participating. So some of the historical trends after the election, so before the election, we talked about increased volatility, and you're going to get some mixed performances. But after the election, which is where we are now, we talked a little bit about the post-election rally, and from that November to May timeframe. Now you were going to get that October rally from November 30th, from November 1st to May 1st anyway. But now that we have the presidential elections out of the way, and we have a really decisive winner, the big businesses are really going to be. I think we're going to enter really into the next bull cycle going forward from here, because all of that uncertainty is abated, and the relationships between the currencies, the strength and weakness of the currencies are going to come into play, and then as it relates to the foreign exchange, as it relates to the options market, as it relates to the equities market. So that's really going to come into play, especially when you're talking about the market movers like the big tech companies and semiconductor industries. The strength and weakness of the dollar plays a significant role in those particular areas. And up until now, for the last couple of quarters of the year, the only thing that's really been moving has been semiconductors and technology stocks. The broader market has been kind of flat, as it relates to the banking, as it relates to energy, as it relates to consumer products, cyclicals and things like that. It's been kind of flat. So all of the movement that we've seen and all the growth that we've seen has been in technology sector, right? And that's led largely by Nvidia and the semiconductor companies, and the investments that the technology companies like Microsoft, Amazon, Meta, and the investment that they're making in AI technology, generative AI technology. The thing is starting to talk to you now, like real conversations are getting crazy. So it's depending on how you look at that, is really kind of exciting, but it's also kind of scary at the same time. When you have a robot that is a learning algorithm that takes in information from all over the world, aggregates it, and then spits you out a real conversation, right? So I had to ask me how I was doing this morning. It was really crazy. So those are things to keep eyes on. Then you're gonna have to talk about like the small caps stocks. They're going to tend to outperform the large cap stocks in the months following the election. That's just historical trends. But I think where we are now in terms of the stock market, in terms of mobility, upward mobility, we're hitting all-time highs, right? So the Dow just hit, I think, 44,000 and something. Bitcoin just hit over 80,000. So we're getting to the point where there's going to be some retracement of these prices. Some of this is going to abate a little bit, and we're going to get some retracement before the move continues upward. Who knows, how far that's going to go at this point. But when you get to these levels at all-time highs and record highs and all across the board in different sectors, then you're going to have a pullback. And as the interest rates continue to come down, you're going to get more bullish activity in the tech sectors, because there's an inverse relationship between the strength and weakness of the dollar in the technology sector. And when you start talking about that, we started talking about getting into risk on and risk off assets, right? Risk on is really when you start talking about the market sentiment, right? And how optimistic investors are that they can put their money into riskier assets and pull away from safe havens like gold or get out of those low yielding bonds to get higher returns. So when investors are feeling confident, they tend to go towards risk on assets, right? They tend to go towards high yield assets like stocks and commodities, high yield bonds, and that some of the things that you want to watch for there, if you're watching the economic news or indicators, you're going to be looking for positive economic data, strong corporate earnings. You're going to look for the Fed and the central bank policies to be accommodative to the current market sentiment. So and the Fed has a little bit of a dual mandate in that they have to maintain high employment and they have to keep the economy growing and keep interest rates kind of low, right? To hedge off inflation. So the economy the broader economy is doing terrible. The stock market is doing great. There used to be a time when they were the same thing. You could measure the stock market and the economy at the same time, but I think it was George Bush. He made a separation, and now the economy, the large economy, is suffering, but the technology sectors and the high yield sectors are doing fantastic. So really, it's kind of hard to measure the economy based on the performance of the stocks like it used to be. They're really two separate things now. When you start talking about getting into risk off assets, right, that's when investors are not as confident, right? And you're going to be looking at uncertainty, areas of uncertainty like geopolitical pressures, wars, market volatility. And that's when people start to sell off their assets and move to safer investments like government bonds and gold. And they start putting their money back in cash because they think cash is relatively safe, even though the value and the strength of the dollar is falling, right? So that's kind of some of the things that we're going to be looking for going forward. Pay attention to consumer sentiment and consumer confidence information or economic news. And if you want to track some of these things, you can track them on my FX book or forexfactory.com, myfxbook.com and forexfactory.com. I prefer myfxbook.com because it allows me to see the strength and weakness of the currency as the news comes out, right? It'll highlight the screen or the row of information, either light pink or light green, and that tells me whether the dollar is increasing or decreasing in value. And from that information, I can gather which way I'm expecting the next market movement to go in the short term. So some of the things that just kind of happened over the weekend, like last Friday, one of the big things that happened was that Nvidia replaced Intel as a member of the Dow Jones Industrial Average. Okay, so that's very significant because these indexes are weighted, right? So, and they're designed to keep the index moving upward. So when a company gets weak, like Intel, he's no longer a market leader, it'll get replaced with the next biggest, strongest company that they can find to put in the index to keep the growth of that index moving forward. That's why when you look at a Dow chart or a NASDAQ chart, or most of these charts, these index charts, you will see that it's always constantly moving up, right? Making higher and higher highs and things like this, because it's designed to do that. It's never designed to just break even, kill. It's always designed to grow. So that's also going to give the company like Nvidia increased visibility, and it's going to give them a level of prestige for being added to the index fund. So I will keep an eye on the movement of the Dow, the NASDAQ, and the S&P in the next few weeks to see how the market is playing out, right? And really, what you really want to see in terms from a fundamental perspective is you want to see all of those indices moving in the same direction. You want to see that they're all going up or they're all going down. When you have one going up and one coming down, that's going to indicate that you're in a mixed market scenario. So you're going to get a lot of choppiness and a lot of volatility and a lot of consolidation in those areas. But I don't want to bar too far into that because it's going to get into a lot more technical stuff. But there's just a little tidbit that if you were following things like that, you can follow the currency with the DXY, you follow the VIX to give you your fear indication, and you follow the currencies. And from those those 2 to 5 pieces of information, not necessarily the S&P, but those 5 pieces of information will give you at a glance some idea what you should expect out of the market even before you open up your chart looking for entry, right? So that's kind of how I use it on a daily basis. And I do my analysis on a weekly, on a Sunday, to see where I am for the week. I look at it on a daily basis to see where I am that day, and I go all the way down until the entry point, which is for me is a 3-minute point. So I don't really go much beyond that, but from a broader perspective, I want to see where we are in terms of market strength, market sentiment, how that plays out with the news that's coming down the pike for the week, and how I expect that news to affect the movement of the chart that week, right? So I do a top-down analysis to determine my bias, which I kind of hate using that word because I hate to have a bias, but I kind of want to approach the market every day with a clean slate. But I want to know kind of which direction I'm expecting it to go so I can take my positions. Also, one of the things that also happens when a stock like Nvidia is added to the Dow Jones is all of these index funds that track it, these assets. They have to purchase it. They have to sell off the stock, in this case, Intel, they got removed, and they have to replace it with Nvidia. So, and because Nvidia is now sitting on all 3 major exchanges, all 3 major indexes, you're going to see some movement as the semiconductor sector moves, because it's now sitting on the Dow, the NASDAQ, and the S&P. So that's going to entice investors, big investors, institutional investors, to purchase those assets. And in turn, that's going to drive up the mutual funds and the 401k plans. And then you probably saw after the election and with the announcement pending for Nvidia entering into the Dow on Friday, you probably saw a really good jump. And if you're watching your 401k plans, your retirement funds, you probably saw a pretty good increase. And that's because everybody entered a risk on scenario, right? They started getting out of the safe havens, going towards more risky assets. And when you get into the risk on assets, one of the major assets that I like to track for risk on, risk off is Bitcoin, because it trades pretty much around the clock, right? And so when the stock market is closed, the New York stock session is closed, I kind of use Bitcoin to determine whether it's going to be a good day or bad day in terms of market movement and volatility. I think that's all that I want to kind of go over right now. Some of the things that you can do, in these scary times is, always watch the news. The economic news is always key to watch on a daily basis. And some of the things are not going to be on the economic calendar. It's going to be unplanned. So you're not going to have any, you're going to have surprises for unplanned news. But watch the economic news that you can. Watch the political news. And when you see these things, see how they affect the movement of your asset, right? And all your assets like to move a certain way. I don't know if that's at the beginning of the day, the middle of the day, or the end of the day for your asset, but wherever that is, see how that news impacts your asset and how it likes to move and how many points it likes to go and how many ticks it likes to go. So those are things you can do. Watch the market drivers being the DXY, the dollar index. Watch the volatility index, the VIX. That's gonna tell you if fear is entering or exiting the market. And if you want to get some more information about these, just go to investopedia.com and just put in DXY, VIX, and ask ChatGPT or something like that, or one of these AI bots. Ask it to explain it to you, and ask it for scenarios on how you can use it in your trading. So you can do those. You can perform monthly, weekly, and daily analysis. You can, you need to understand your cyclical and your seasonal cycles of your assets, because every asset is on a cycle of some sort. And is either going to be, it's going to be a market cycle, an asset cycle, or a seasonal cycle. You need to understand how your asset moves and understand your market volatility periods. What time of day does your asset like to move? Is it moving in the Asian session? Does it like to move in London? Does it like to move in New York? When does it like to move? Find out the volatility periods, right? And then you trade those periods for maximum return. And then we talked about understanding of what the size of the thing matters, right? So the bigger the event, the more impactful it is usually the more impactful it is on your asset, on your trading day, right? Not always, but most of the time. Now, I used to use gold as a barometer to measure the movement, right, of volatility, or if the news are very impactful, things like that, because it trades 24 hours a day, just about 6 days a week. So I used to use that. But what I found when trading gold or tracking gold as a measure of market sentiment was that the correlation between that and the market is not always 1-to-1. It'll fluctuate. It'd be 0.7 to 1 or 0.8 to 1. And you would be expecting a move out of it and it wouldn't move. So it's not in my opinion, not a good, reliable determining indicator to determine if that move was a big move or not, because gold doesn't always respond immediately. And the last thing I think you need to just kind of hone in on is understand if something makes or seems uncertain into the market, is this going to cause a level of uncertainty in the market? If something is confusing about whether or not they're going to raise rates or lower rates, or by how much, if there's some uncertainty in the market, it's going to cause some instability. And the markets don't like instability. Investors don't like uncertainty. And that's going to have a drastic impact on your fundamental analysis. And it's going to be, it's going to determine which assets you trade based on the impact of whether it's going to be an uncertain, an asset that brings uncertainty, or an asset that brings stability. Or I'm not the asset, but the news that brings uncertainty, or the news that brings stability. So that's going to help you, I think, in determining how to play the market, whether you plan the Forex, the ETFs, whether you're building portfolios. It doesn't really matter. They tell us every day what the news impact is with one of these financial calendars, one of these economic calendars. And they're not really talking to us. They're talking to each other and telling each other what the news impact is. But because it's visible, we can read it also. But they're not really telling us. They're not really trying to tell us that the market is going to go up or down, or what the potential of something is to make us money. Or they want to take money from us. They don't want us to make money. But if you understand the economic impacts and the political impacts from the fundamental aspects, you can parlay that into real dollars by good technical entries once you get to your chart. So I think I'm gonna cut it off right there. I've been running my chops for about 30 minutes now. I'm gonna open it up to any questions, concerns if you guys had, that anything I said or didn't say. So I'm gonna shut up now and see if anybody has any questions.
Good night, Mr. Tony. I had a question about, you said something about George Bush creating a separation between the stock market and the rest of the economy. Can you explain that a little bit more?
Yes. I think it was when George Bush was in office, all right? They used to measure the economy and the stock market as one thing. As the economy did well, the stock market did well, right? And I think that was also at the same time they changed the formula of what's being calculated in the GDP. And they took some things out, and I don't remember what they are now, but they took some things out that was slowing the growth of the company that displayed whether or not the country was growing faster or slower. So the things that made the country appear weaker or not growing as fast, they took that out. So when they measure in GDP now, and a lot of people probably don't remember it because it's been like that now for over 10 years, they took that stuff out. Now people just say, oh, we're looking at the GDP and the economy grew by 2%. Well, but if you put the other formula back in place, it didn't grow by 2%. It probably grew by, a point and a half. But they needed to show growth, that the economy is growing, the economy is expanding. So they separated, so the two things were separated. So now you can no longer measure the strength of the economy and the stock market at the same time. So that's why you will see, for example, the stock market going up, but the broader economy, like the S&P and all these, you see all these companies going out of business, these shopping centers, these malls, these restaurants, they're going out of business, right? By the hundreds. But you look at the technology sector, it's booming. And Nvidia went up like something like 1,500%, right? Last year. It's up another like 200% this year. But why are they still closing up restaurants? Why are they still closing up malls? Because the broader economy is still suffering. And they've been lying to us about the job market. They've been saying we've been getting 235,000 200 thousand jobs a week growth. When it turns out, I think one of the reports I heard was closer to 12,000 jobs. So they play fast and loose with the information, but it accomplishes the goal that they wanted to accomplish at the time they want to accomplish it, which is to keep the economy from crashing. That's really the ultimate goal. They don't want it to crash and say they want it to crash, and they want it to grow under their control. And everything looks disjointed and unconnected, but it's very well controlled and very well manipulated. And we got to be thankful that it is. Otherwise, none of us will make any money, because since we know how they're playing the game and what they're going to do, we can participate. We just got to understand how to read it. We got to understand, the news that they're putting out and how it's going to affect the markets. Uncertainty is bad. Wars are good for the market. War is big business. Wartime production is fantastic for growth, right? Defense spending is fantastic, right? You got bullets, you got rations, you got backpacks, you got shoes, shoestrings, you got weapons, bombs, you got everything, So when you start looking at what's really going on, right? As bad as war is, it's big business. Big business for a failing economy. And when you start looking at things like gold or precious metals in general, for example, if you really want to know the pulse of the economy, when you start seeing the economy and precious metals rising like it's rising now, that's a sign of a failing economy, a failing currency. Because if the currency was doing great, if the economy was doing great, nobody would be running to safe havens. Everybody be roaring 20s, everybody popping. They pouring out, everybody doing great, right? So when the precious metals are running high, then that's a scary time, because that means everybody's afraid and they're buying up gold by the tons. So that's how you can kind of measure, and gauge whether the economy is doing great or whether it's just the stock market doing great.
Okay, thank you.
You're welcome. I got a question in the chat. The two websites were forexfactory.com and myfxbook.com. I'll put it in the chat here, if I can type. There you go. All right. Anybody else got anything they want to add? Tell me. Yes, ma'am.
As far as gold, is there something else that you can use that it's an inverse to?
What are you trying to measure?
because sometimes it doesn't, you can't determine with the dollar. So is it something like interest rates or something else that can be used?
The interest rates, the DXY is a reflection of the interest rates. Interest rates move so slowly.
Okay.
If you were tracking it with interest rates, it'll move very, very slow. But the strength and weakness of the currency moves more quickly. So are you trading? What are you trading? Are you trading Forex? Are you trading stocks? What are you trading?
I do both, but Forex, I'm talking about at the moment.
Yeah, the best indicator for Forex is going to be that DXY.
Okay.
Right? But if you were looking at trading stocks, for example, say you trade NASDAQ or you trade the Dow or whatever, what you're going to be looking at are you're going to be looking at three inverse ETFs, right? You're going to look at the SQQQs. I'm gonna put it in the chat. All right.
Okay.
SQQQs, the S Dow and the S Dow and the SVIX, right? The SQs are going to measure the NASDAQ. It's an inverse. The S Dow is going to be the inverse of the Dow, and the SVIX is going to be inverse of the S&P. And it's pretty much a one-to-one relationship, right? So if you determine, and you can actually trade those actually, as inverse ETFs. So if you understand that and what that's doing, and if they're all moving in the same direction on the inverse side, they should also be moving in the same direction on the asset side. So
Okay.
you'll see a divergence in the charts.
Okay. Thank you.
You're welcome.
I had a question.
Yes, ma'am.
FX book and then the factory one that you listed, is that the same one that you're referring to on the last call when you held up your device showing the flow of money? Is that
No,
the
ma'am.
same?
Those are
Can you?
those are the same two websites, but what I was showing you on there was what was I showing you? I was showing you I got an
FinVix.
Finviz. I was showing you Finviz, and I got an elite account. So I think it's finviz.com.
Okay. Do you mind putting that in the chat for us? Thank
Yes,
you.
ma'am. It's finviz.com. And if you don't get the elite account, which is like 160 something bucks a year or something like that, your data is going to be delayed about 15 minutes. So
Okay.
you're going to be getting late data if you don't get the elite. But you can also get that same information or similar information if you use a tool like Thinkorswim or maybe some of the other broker houses. They have a heat map in there, but you don't get the numbers. You don't get the percentage changes, which is why I don't use it. And it's free. But I think it's worth 160 bucks a year to have that data at my fingertips.
Thank you.
Show it. Is there a way you could share your screen and show where on FinViz do you find it and how to utilize it?
Yes, ma'am.
Appreciate it.
Are you welcome? Can you see my screen?
Yes.
Is it too small?
Kind of, sort of.
That better?
Yes.
Okay. You go
Much
to you go to Finviz, and right here on the maps, heat maps, right
all
here,
right.
all right. And what you're going to see all of it, and you can see this is probably happened with Friday. They had a little bit of a sell-off going into the weekend, right? So you see all these technology stocks sold off, right? And all these financial stocks took off, right? So this gives you a look at the broader market right here. But this gives you a look at the world map, right? So you can see the world, was in bad shape last time the market was open. They had a big sell-off. Taiwan Semiconductor is the big number one manufacturer of semiconductor raw materials. So this is probably number one in the industry, why it's so big in Taiwan, the biggest company there. And if you plan the semiconductor plays, you will watch this. and you will watch on the S&P side, you will come down here, you will watch Nvidia, semiconductors, Broadcom, AMD, these companies here, right? Those are going to be the big three to watch on that side. If you want to watch the full map, which you can't see, let me scale down a little bit. That's the full map. And if you just want to watch the S&P, that's just the S&P, right? But you can also do some other things here. They got a screener up here that I never use for anything. And they got some other stuff. You can watch your portfolio. You can build groups. You can do a lot of stuff in here. But the only thing I pay for, the only thing I really need off of here is this heat map. I do all of my analysis in my trading tool, and my trading tool is Thinkorswim. So I do all of my screens. I do all of my watch lists and all that stuff out of my trading environment.
So when you say you're watching the flow of money, you mean you're watching what's lighting up green or what's lighting up red?
Yes, ma'am. So if you look down here, this legend down here at the bottom, right? I'm gonna move my mouse out the way. But down here at the bottom, you see this legend. It goes from 0 to 1, 2, plus 3, right? And -1, -2, -3. That corresponds with the color of these little boxes here. When it gets to -3, right? That's a 3% change, right? So when you get to like a 3% change, then you really got full on, like -3, you really got full on selling or full on buying, right? And if you come in here and you see something like this, you see Nvidia is green or red. Like look at Tesla. Tesla was the only green thing on the board Friday. All this other stuff was red, right? All these big boys was red, right? Tesla went up to 321. I think it went as high as 337, I thought, before it pulled back. Now, 2 weeks ago, before the election, Tesla was like maybe 200, and a month before that, it was like 148. So it went up about 100, almost $200.
Yeah, they said Elon made about what, 12 billion or 15 billion after the election?
Yeah, more than I can count, Jack. So, but yeah, but you'll see stuff like this. And this is what I say when I say that the broader market is a lot of times crap, because you'll see all of this down here in red, and you'll see all of these technology companies in green. That just tells you that the push that you're seeing is really concentrated in the technology and the semiconductor sector.
Okay, understood. Thank you.
You're welcome.
So do you use the same heat map for Confluence on my FX book?
No, on my FX book, this is what I see. I use this for my economic calendar. All right, I'm gonna I got a big monitor, so sometimes it appears a little small. So on my FX book, I use this. I come here to my economic calendar right here, right? And this is a free account. I don't think you have to pay for this one. And what I'm looking for is this column right here, this actual column, right? If you plan whatever asset you're playing, and I only look at the medium and the high impact news. I don't care about the low impact news, which appears in green, because that doesn't really move the sticks for me. So I track these here, and when the news comes out, it'll give you like a little countdown over here, and it'll tell you how many seconds you got till the news comes out. And then you'll start seeing this little box right here. And this is really the only reason why I use this over Forex Factory, right? This little pink box right here, right? Sometimes it'd be light green, sometimes it'd be this little shade of pink right here. This tells me if the currency is up or down, right? So in this particular case, the yen took a dip. They were expecting whatever it is, 3804 billion yen. They got 32 something, 3263 billion. So it was down. So the currency took a dip. Now, don't ask me how that affects the movement of that asset, because I don't really track the yen anymore. But this little pink box here, this little pink or green box that pops up, tells me if my dollar is going up, going down, or stayed the same, right? And from that, I know what I'm expecting to happen when I'm trading my particular asset. Like if I come down here to the Fed, and this is going to be on Tuesday, got all this Fed stuff happening. You got Waller, Barkin, Kashkari, whatever her name is, these cats, right? All this is medium impact, right? So a lot of times I would kind of stay away from the market. And there's not a lot of other economic news going on this day. So I would kind of stay away from a market like this unless something unexpected happens and it pushes it one direction or another, because you're probably going to get some choppiness here, right? Because there's nothing else going on at day 10, 10, 15, 2 o'clock. You're gonna get some choppiness up in here because there's nothing else going on. Now you come down to Tuesday, you got CPI, you got high impact CPI, you got inflation rate month over month, you got all these high impact days, right? Now these are going to move the sticks right here, right? This inflation rate right here, year over year, that's going to move the sticks. Anytime Jerome Powell speaks, he's going to move the sticks. I will wait to see how that plays out. Anytime there's an FOMC meeting, that's going to move the sticks. These people here, Logan, I don't know what some of these people policy, and market outlooks are. But a lot of times I pay attention to Yellen, but she's never on this calendar. But I pay attention to Yellen when she speaks. Pay attention to Powell and what's the other guy's name? Starts with a B. Can't think of his name now. But he always moved the sticks too. But I just play that like that. I just come down here and see what's going on for the week, plan my week out and say, well, I'm gonna trade this day because it's high volatility. Initial jobless claim is always high volatility. And this always happens on Thursday. This stuff, I think his name is Barkin. That's him. So I watch these, and then I don't really play oil and gas, but if I did, I would watch those. That always comes out at, well, I think it's 10 o'clock, 11 o'clock. 11 o'clock that comes out, oil and gas news. And then Powell speaks on the 14th, right? So that's gonna move the sticks. So whether you're trading Forex or whether you're trading the stocks or making the portfolio build, that's going to move the sticks. And then I don't really get into anymore so much as the foreign exchange stuff, like the GBP. I got it up here because I want to know how it performed. But I'm not so concerned with that market unless I'm trading it. So you all, since you're trading Forex, you're probably paying attention to this news here, the GBP news and the stuff that's going on in China, how that's moving the sticks. This is the world's second largest economy, so they're going to always move the sticks some kind of way. Retail sales, that's always important ones. Import-export prices, this is probably going to be more important as Trump gets in office, when we start talking about tariffs and all that kind of stuff. So that's probably going to play a bigger role in the future. And I really just watch it really for that. And really these little colors here. This is the only place that I found that gives me this little background shade that tells me the strength or weakness of the currency based on that news.
And I really appreciate that. So if JPY is showing red and then say I was trading it against the USD and the USD was showing green, that's guaranteed that is bullish.
There's no guarantees, but there's no guarantees, but the probabilities will be on your side.
Okay. Hey, thank you so much.
You're welcome. The other site that I use is, and I don't use this as much anymore because I built it into my tool, is the real-time stock futures. When you're looking at assets, right, from a fundamental perspective, right, these futures are forward-looking. They're futures, right? They give you a glimpse into what people are looking to pay for something in the future. They settle commodities in the future. They sell, hog bellies in the future. They sell, oranges in the future. What you going to give me for a bundle of oranges tomorrow if I pay for them today? What's the price, right? So this tells you which way the futures are going, so you can have a little bit of a glimpse into which way the market is moving. So I keep this up. I keep this up at all times as well, and I kind of just take a glance at it from time to time, right? So these are the three main sites that I really track in terms of market sentiment. The other ones are all just analysis websites, you know. So and we're not gonna dig into that, but this is what I will track. These three sites right here.
I'm sorry, could you repeat the name of the future website again?
It's called investing.com. I'll put it in the group. Here you go. Let me see. Let me see what I did with my where the Zoom go. I don't know where it went. It went somewhere.
That's sentiment on stocks or Forex or both?
It's just futures. It's the sentiment on futures. And yeah, like if you're looking at like this is all the futures that it trades, right? That it tracks. It's got the Dow, it's got the S&P, it's got the NASDAQ, it's got the small caps, right? They go to VIX futures to tell you if fear is, rising or falling. And then you come down here, you got all these other things here, right? And you got the Nikkei to track the Japanese market. You got the Hang Seng to track the Chinese market, right? So you got the Nifty 50. This is the Kospi is tracking Korea. So and I think you can add some other ones here. I just never did because I didn't need them, right? Because these right here, these ones in the US tell me what I need to know for what I trade. But when I was trading in the Forex market, I was looking at the Nikkei. I was looking at the DAX from out of Germany. All right. And I was looking at the Hang Seng. I was looking at those additional ones. The rest of this stuff is just, for me, kind of useless. I really should take them off. But I don't because I'm lazy. And I just didn't feel like doing it because my stuff is right here at the top. Right. Any more questions about this? All right. I'm gonna stop sharing this screen. So.
Okay, so last question. Somebody said, how do you expect the housing market to perform in the next 6 months?
The housing market in the next 6 months? That's a tough question. Well, the next 6 months, let me see. We're gonna be just going into the spring, right? So historically, the housing market is going to slow down in the winter months anyway, right? Nobody wants to move in the wintertime, right? Investors are probably going to be buying. When I was buying real estate, I bought most of my properties in the wintertime because I knew other investors didn't want to be out there working or buying properties in the wintertime, right? So that's when I got some of my best deals. Because people are lazy, they don't want to get out there in the snow. I didn't mind so much. But from an economic perspective, if interest rates continue to come down, right, people are going to want to buy because of the lower interest rates. They're probably going to want to refinance as rates come down, and they're probably going to wait a little bit, to be honest with you, because if Powell drops the interest rate again, they're going to want to get the new lowered interest rate, especially for those people who are refinancing out of high rate mortgages, right, high rate products, because it costs money to refinance a property. And you rather do that just one time versus 2 or 3 times, right? Because we got to recoup your cost of investment every time you refinance a place to get a better rate, right? And sometimes it gets to the point where it makes no sense. So it's probably going to slow down over the winter months, and it's probably going to pick up. There's a housing shortage. At least that's what they're telling us. So housing is a supply issue. And then you got a lot of pent up energy where people who want to buy didn't buy because of people weren't selling. People weren't going to sell their home and get it with a 2 or 3% rate, and then have to go buy another home at 7-8%. So as those rates come down, right? And people can buy more. All of those sellers who want to sell, they will. So their supply shortage is going to loosen up because those older homes are going to come onto the market. And the builders are going to be building, they're going to be selling more houses. So it's going to pick up going into the future as the rates come down. But if you look at new construction, if you're looking at, if you sound like you might be an investor or something like that, so if you're looking to buy new homes, new construction homes, from 2014 onward, those houses are crap, right? They putting cheap materials on, they build them with cardboard, and I would get a home inspection even if it's a brand new construction. And a lot of people who bought when the interest rates were rising, they're probably in trouble right now, right? And they're probably going to be selling too, right? They're going to probably sell as quickly as they can because they probably got into it and now they're upside down. They're probably behind on a couple of payments. They probably had adjustable rate mortgages that kept going up higher as the interest rates rose, but nobody was buying. So you're probably going to see an influx of short sales and foreclosures come onto the market all at the same time as people looking to get into new projects.
Thank you so much, Mr. Tony. This is Dr. Oliver. What do you think about the mass deportation? Do you think that will increase a lot of supply of houses due to mass deportation that might happen with Trump?
I don't think I understand your question. You kind of broke up there on my end for a minute, so I don't think I caught the whole thing. What do I think about the supply of houses under Trump?
Yeah, due to mass deportation that he said he might do. So if there is a lot of deportation happening, so that decreases the population, and that might lead to increasing house supplies.
Well, let's just do the math on that, right? Right. I think really that was just a election talking point, because it's gonna cost something like $80 billion for 1 month to deport as many people as he's talking about. You're talking about staffing up, training, transportation, housing, food. The other countries got to accept them when they send them back. They gotta track all of this through this documentation. So it's easier said than done what he's trying to do. It sounds nice as a political talking point, just like the 60% tariffs. But in terms of mass deportations, that's probably not as close to reality as we think it's going to be in the short term. But who knows? They might have been working on it already. But I don't see how they're going to pull that off with the country being $35 trillion in debt, with over $83 trillion in outside debt allocations. So where are they going to get the money from, right? So that, some of those things sound good to electrify his base, because those are some of the things that they are concerned about. But in terms of how you're going to fund it, how you're going to pull it off and transport all these people and track them, it's going to be very difficult to do that. But if you were able to do it, right, somebody's going to step in and pick up those houses. Institutions, probably BlackRock or somebody, going to pick up some of these houses. But they already own 40% of the houses in the economy. So, we have to wait to see on that one. I don't know how that's going to play out.
Thank you.
All righty, you guys. Well, we're gonna have Mr. Tony back at some point. Mr. Tony, thank you so much for hopping on tonight. I truly appreciate it, and I know everybody else appreciates it also. So everybody say thank you, Mr. Tony.
Thank you,
Mr.
Tony.
Thank you, Mr.
Thank
Tony.
you so much.
Thank
Thank
you
you.
so much.
Yeah.
Thank you.
All right, yeah, Mr. Tony, we really appreciate you. I tried to make sure they understand everything, not just from like a technical aspect, but make sure they get a full, well-rounded education of fundamentals also. So thank you so much for hopping on, and I'll see you guys next week.
Well, I appreciate it.
Thanks,
Thanks,
Jess.
Jess.
Cute baby.